All right, this is interesting. The annual inflation rate hit its lowest level since February of 2021, and that's despite consumer prices rising last month. The 12-month inflation rate now sits at 2.5%, which is down from 2.9% in July. The consumer price index, meantime, rose 0.2% in August, the same increase as in July. Meantime, we've got this live look for you over from Wall Street. The markets are down slightly today and this morning, heading into the afternoon. At one point this morning, the Dow fell more than 600 points. At the moment we're showing this to you, it's down about 370. Meantime, the S&P 500 and NASDAQ composite also slipped. I'm so confused by all these numbers, but the good news is CBS News' business analyst Jill Schlesinger is here in Studio 57, which is always a treat, to help explain the connections and disconnections between all these things. First and foremost, why is the Dow down today?
You know, one of the things about the data that come out is that there are expectations built into what is happening on the trading floor.
Okay.
And so the expectation generally has been, hey, we know the inflation rate is coming down, which is exactly what happened. And we also know that the job market has really decelerated. We are getting fewer jobs created every month now for the last few months. So there was this expectation among a lot of the trading world that, hey, maybe the Federal Reserve is going to cut interest rates by 0.5 percentage point at their September meeting, which is in a week. Well, then you get the data out today. And as you said, you know, inflation, it's sort of conquered, not vanquished.
And the graphic folks are seeing on the screen explains why 0.5% rate cut would be such a big deal. We've had no change for so long, and the last increase was 0.25 percentage
The weird thing is, the last time we saw the Fed cutting interest rates, it was 4.5 years ago. It was before their scheduled meeting. The COVID lockdowns had begun. The economy was shuttered across the globe, and the Fed had to immediately cut interest rates very quickly. Now we have a period where the Fed has had to keep interest rates high to combat inflation. So they're ready to turn the dial back. The question is, well, how quickly will they get back to more reasonable interest rates? And reasonable is really in the mind of the person, yes, and the person who's like actually controlling the economy. And I think the Federal Reserve has told us time and time again, which I think traders don't actually listen to. We know that we're going to be cutting interest rates. Those rate cuts will take place over the course of a year, maybe even 2 years. We don't know exactly where we're going to land. We don't know how fast we're going to be there, but we know directionally they're going down. That's what we know.
That's all we know.
That's it.
And so a lot of what you see on Wall Street, no big surprise, is speculation, emotion, prediction, and it's not tied to fundamentals. What then do the new data say and suggest about where the economy is? Because you kind of have, like, prices are still up, but things are still cooling. So where are we?
I mean, it's very confusing for people. I think the most frequently asked question that I get on my podcast is, I don't get this. If the inflation rate is coming down, why are prices high?
Right.
That is a very normal reaction. The inflation rate is measuring the increase in prices for goods and services, the increase. Now, we generally see prices go up over time, not by as much as they went up after the economy reopened after COVID, but we have seen before the COVID period inflation of around 2%. Okay, just think of that, 2%. Yeah. Well, then you get the COVID crisis, you have the reopening, and we have inflation go all the way up to 9% annually. Now it's come down, we just talked about it, 2.5%, so we're moving in the right direction. But the years where we had that massive increase in the inflation rate pushed prices up, and those prices are still high. Now, I would like to have a thought experiment with you.
Go for it.
Okay. Now, you know how we all say, oh, I wish prices were lower. Don't root for that.
Why?
Because when prices are lower, it means that we're in deflation, and it usually means we are in a massive recession.
Interesting.
So let's not root for that. I've got a new thing for you to root for.
Yes.
We're not going to root for prices to go down, but we are going to root for wages rising. They don't have to go up massively. We want wages to go up faster than the inflation rate. That's what's happened over the last 4 or 5 months. That's good news for workers.
If that can continue.
If that continues and the inflation rate comes down, but wages stay up, we're going to feel a lot better. And so that is what I want, the collective hope. We want our wages to go up, prices can stabilize.
Well, now that you've said it, I'm sure it will be so.
Oh, we're manifesting it.
Jill on Money is the podcast. Jill Schlesinger is the expert. Thanks for being here, Jill.
Thank you.